Hi, welcome to the closing cost video. And this video is a companion to our other video we did, which was called low closing costs. What's the catch? This video is going to be to really explain what are closing costs. It gets confusing because I think people hear, oh, it's only $149 closing costs. And people think, well, that's impossible. They're hiding it somewhere because what the confusion I think is there's the overarching title of settlement charges, and then within those settlement charges there's basically three boxes or three separate groups that consists of those settlement charges. And so that would be what we call bank closing costs. That would be any fees that come from the bank or other third parties that the bank would hire, such as a title company, an appraiser, credit report, flood cert, that type of thing would be bank closing costs. The second box, which is a lot of times the most expensive box, would be what we call your own money if you're the borrower. It's really commonly known as escrows. Actually, it's called escrows and prepaids. So that box would really consist of really the borrower's own money for homeowners insurance. Again, this box would be the same no matter where you went. If you went to one of the high closing cost lenders, the escrow should be the same because the taxes and insurance are going to be the same. And there's a prepaid interest for the month that you close. It could be a little bit different, obviously if they're charging you more. But the main thing is it's the borrower's own money. That's box number 2, the escrows. And then box number 3, we call government, and it's labeled government because it's government fees or government charges. The government likes to get involved heavily in banking, and one of the things they do is, depending on the type of loan, they'll have different charges and fees, and a lot of times that's dependent upon credit score and loan to value. So depending on what that is, there may or there may not be a government delivery fee. In some kind of loans, you can avoid those altogether, or depending on the credit score and loan to value, it's zero, but it could be a small amount. And one thing that happens with these, what makes banking confusing or lending confusing to some people, is that some of these high closing cost, high rate lenders, they already have such high fees. They know they're just slamming you with major fees up front on closing costs that they say, oh, well, we already got so many fees up here. Let's just hide these government fees. Let's just take those away. So what we'll do is we'll raise the rate a little bit, and then we'll make those fees go away. Well, you can play games like that if you want to, but if you have like the low closing costs, the great rate low closing cost model, you just lay it out for people and you say, look, here's the bank closing costs, of which the low closing cost model will basically end up paying for the majority of those for the person. So they're seeing, hey, I'm getting a great deal here, a really great deal. Then they say, hey, here's the escrow, should be the same as anywhere else, and here's the government delivery fees. And if someone says, well, what are those? And then you can explain it to me and say, yeah, here they are. You just pay them up front, or you can do what you want with them. Or if you want to get rid of them, there's ways to get rid of them. You can have that discussion, but you want to have an open discussion so people are aware, I think. So, and back to the bank closing costs, that's the part. So of the 3 boxes, bank closing costs, escrows, and government fees, is 3 boxes. That all encompasses settlement charges. So if someone's confused, a lot of times people hear this, like I said, these low closing costs, and they say, well, that's not possible, because they know in their mind, they're thinking, well, the escrows alone are going to be, $2,000, or that's impossible. Well, you're talking about the box number 1. We talk about bank closing costs, but the important thing to know is that the other 2 boxes are pretty much the same, but these high closing costs, the mortgage shops, or high closing costs that the banksters like to charge, what they do is they kind of like charge what all the normal third-party charges are, whatever the title company charges, it'll be on there, whatever the appraisal charges, it'll be on there. And then what they do is they take all those charges and, of course, pass them on. But what they'll also do, and this is the bad part, is they'll throw in these massive fees. And they'll say, well, it's going to be processing fee. Processing fee? Well, why charge them a processing fee? It's just a made-up fee. We call them junk fees. I say I mean the low closing cost, great rate model would call that a junk fee. Like, well, they have a processor, and the processor paid a salary. You don't charge someone a fee for that. It's just a made-up number. Then they say, oh, well, then there's going to be an underwriting fee. Well, underwriting fee? Well, every loan has to get processed. Every loan has to get underwritten. I mean, but again, it's just a way to generate fees to the bank. So it's a different business model, completely different than the low closing cost, great rate model. But the reason I'm pointing this out to you is that The low closing cost rate model would say, not only do we have no processing fees, or zero, and we have no underwriting fees, that's zero, but even though we do have to pay the title company, let's say $400, for example, and even though we do have to pay the appraiser $300, for example, even though we do have to pay some of these other fees, even though we do have to pay that, what we'll do for you, Mr. Borrower, is we'll actually pay most of those costs for you. So at the end of the day, instead of having the $400 for the title work and the $300 for the appraisal and the few other things, credit report, flood cert, and have it come to $900 or whatever it is, we'll just go ahead and pay most of that for you, and we'll just charge you $149 plus recording fee. You got to pay the county recording fee, which is about $50 in the case of refi. How do you like that? And that's what they'll basically say to their borrowers. We'll end up paying most of that for you. And so the borrower's like, wow, I'm getting a fantastic deal. And yes, they are. And no, they're not paying at a higher rate to get that. It's just part of the strategy of the lender to actually subsidize and actually pay for some of those closing costs, because the lender knows I'm going to make it back on volume, I'm going to make it back on the interest, and I'm going to get paid for servicing that loan. Okay, so there's a business model there that says, yeah, I can take a little hit out front. I know I'm going to make that back very quickly, and then I'm going to be money ahead because I'm getting a lot of volume. They're going to go out and tell everybody they know. Nobody can beat our deal, and it's just a great business model. Just like I said in my other video, much like Walmart did when they came on the retail scene and just exploded in growth, and everybody wanted to buy things for less, and much like Amazon is doing right now, coming on the scene and selling, the exact same product with the same or better service at a much better price. So it can be done. It is being done, and I hope that clarifies things and helps explain, the part about the closing costs versus settlement charges. And if you have any other questions, you can contact me at the website or send me an email. Thanks.